Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a new topic which is known as journal versus ledger. See, journal is also inception of accounting system, and ledger is after the journal entries. So what exactly is the difference between both of them? Let's understand them in a much detailed format so as to get a really a greater insight regarding these two particular topics. Now see, journal and ledger are the most important concepts of the financial accounting. So if you don't know the journal or the ledger, you wouldn't be able to decipher the real meaning of each transaction, which is the most important thing in itself. So journal is the first form of the transaction, and in journal the accountants debits and credits the right account and records the transaction in the books of accounts for very first time using the double entry system. And in ledger, the accountant creates the T format. I'm talking about. Okay, so ledger will go something like this. This is your ledger, and it will look something like this. Let me draw a line over here, and there will be a middle line over here, and it's a T format basically, and there will be debit items over here and a credit items over here. So it's like this T format. There will be a one big line, right? So we can say that ledger is basically this is the extension of the journal, which is the first form. But since we create the trial balance, the income statement, the balance sheet from looking at the ledger, which is right in front of you, the ledger is also very important. Now, there are differences between the journal and the ledger. Let's have a look at one by one with the help of the infographics. Now, the meaning is the first point that we are supposed to discuss. The journal is the first entry. As I told you, it's the inception thing for the accounting of the financial transaction that is summarized and recorded as the double entry system. So in journal, there will be recording on the debit side as well as the credit side of the transaction. There will be always be a double effect. There can't be a single effect. If it had to be in a single, you go for the single entry system. But if you have a double entry system, you need to have two effects, and journal records that. Now, once you have recorded the journal entry, you move to the ledger. The ledger is recorded from the journal in the T format, which we just learned over here. See, this is the T format. There's one line that you need to draw over here, and is a source of the trial balance. So all the balances from the ledger are then being carried forward to the trial balance and income statement, from trial balance to the income statement and trial balance to the balance sheet. So in this format, journal to ledger, ledger to trial balance, and to a P&L and to the balance sheet. So this is the meaning of the ledger and the journals. Now, what is more important? See, journal is more important than the ledger, because if it is done wrong, every other thing is gonna go wrong. There's nothing that can get right, because this is like the base. This is like the base of a building. So if you're building something, if your base is not strong or if the base is incorrect, everything is gonna fall down. Ledger is dependent upon the correctness of the journal entry, because if the journal is recorded right, the ledger will follow along, and it has to go right. It's as simple as that. Now, the format of journal is simple. What we include is the date, particulars, ledger portfolio, debit amount, and credit amount. It looks something like this. There is, let's say this is your journal entry, and you started over here. So it's going to be the date, then there'll be a folio number over here, then you'll have the particulars, and over here the debit items, and besides that there will be credit items. So this will be a bigger column, this will be a smaller column, folio number, the date column is there, and the debit and the credit entry. So this is how the journal entries are recorded. There will be two transactions, let's say cash account debit to, let's say, asset account. You have sold an asset, so let's say you have sold it for $1 lakh. So debit what comes in, credit what goes out, asset is going out. So this is how the entries have been recorded. The format of the ledger is T format, where we used date, particulars, and the amount in each side. So it's something like this for the ledger. Now in case of ledger, It's in the T format, as I told you, and this both columns will be expanded. There will be one more column over here of a date. Then this will be the particulars, and there will be amount over here. Same that goes for the next, right? And let's create a line over here. So this is how it is supposed to look like: the amount, the particulars, and the date. So this is the debit side, and this is the credit side. This is how it is supposed to look like. So it's a T format, and there'll be a line over here in this middle. So it's T format, where we use the date, particulars, and the amount in each side. Now the label. Journal is called the book of the original entry, right? As it's the starting point, so it has to be original entry. And ledger is called the book of the second entry because it is taken from here. Now, the act of recording, the act of journalizing is called the journaling is called the journalizing, and the act of ledgering is called the posting. So over here, it's known as posting, and what you're recording are is basically journalizing, right? Sixth, now how the entry is recorded. In journal entry is recorded as per the date of the transaction, as per the date over here. This is, let's say, 11 to 2018. So this how it may be recorded, the date wise. And in ledger, the entry is recorded account over here. Let's say this is basically an asset account. Okay, so this is an asset account, and the same entry of the cash will come over here as cash account, and 10,000 amount over here. And there'll be a one more account. This is basically an ledger of an asset, and there'll be another ledger for the cash, right? So this is how the entries are recorded. Like, I'll show you for the cash also. This is for the asset. In the similar fashion, there'll be for cash. So for cash, the entry will be recorded over here on the asset side as 1 lakh basically, and this won't be there. So this is the cash account, this is the asset account. Now the narration part. In journal entries, the narration is must to understand the nature of the entry. The narration will be something like this, being the asset sold for cash. This is the narration that you write. And in ledger, narration is optional. Over here, you don't need to write the narration. It's just the posting of the entries that you do. So narration is not that important in that particular arena. Now, what is the necessity of the balancing? See, balancing is not required in journal. Over here, there is no balancing that is required, that it should match. But balancing is mandatory in the ledger account, because let's say asset is over here, and let's say there is one other transaction cash over here for $90,000. So the balance CF, you need to balance the account. Balance carried forward will be is equal to 1 lakh minus 90,000. So the cash account that will be standing as a 10,000. But this has to tally 1 lakh over here, 90,000 plus 10,000. So this is the difference. It is mandatory. Balancing is mandatory in ledger. So we have quietly understood the differences between the journal entries and the ledger. Let's make the final conclusion on this. See, understanding the journal or the ledger is of utter importance. So if you can understand the journal or ledger well, the rest of the accounting, would seem very easy to you, because you would be able to connect why an account is being debited and why another account is being credited. However, if we compare, we would see that, the journal is the vital or the most important than the ledger. And we have understood the reason behind it, because if there is an error in the journal part, you can't imagine what's going to go wrong over there. Everything over there is going to be wrong. So ledger is also important, but because it is the source of the financial statement. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.